Good evening, everyone. Aman, Ayan, Hiba. Please confirm if I'm audible to all of you.
Yes, sir.
Okay, just a minute. Okay, everyone. So in the last class, we were doing question based on the dissolution. We already understood the concept of dissolution. In the first class of this chapter, we understood the meaning of dissolution, wherein I've explained that dissolution, as per the Indian Partnership Act 1932, says means that dissolution is basically termination of the partnership. And whenever a firm is dissolving, in that case, we need to dispose of all the asset and pay off all the liabilities. Unless and until all the assets are disposed of and liabilities are paid off, a firm cannot be dissolved. Then, from the accounting point of view, in order in the situation of dissolution, we need to prepare these three accounts: realization, partners capital account, and the cash account or the bank account, depending upon the question. Then we understood how do we actually prepare realization account. There are certain points that need to be consider while preparing the realization account, wherein I've told you that to prepare the realization account, the first step in the formation of realization account is that we need to first of all transfer all the we need to transfer all the asset to the realization account except the cash, bank, and profit and loss, debit balance, advertisement suspense loss, miscellaneous expense, that is also a loss. So apart from these items, every other asset needs to be transferred to the realization account on the debit side. Then the second step is to transfer all the liabilities, excluding the partner's capital account, partner's loan account, P&L credit balance reserve, and workman compensation reserve. Then after doing this, the fourth step is to transfer all partners loan account will be transferred to the cash account or basically the cash account or bank account credit side, right? And then we need to transfer all the partners capital account and P&L reserve and workman compensation reserve to the credit side of the partner's capital account. And then realization expense is also known as the dissolution expense and winding up expense. That is also understood in the previous class. Then we did few questions based on it. I think we did question number 1, wherein we were required to prepare the realization account. Then after that, I think we did this question as well. Guys, please tell me we have solved this question or not. I'm not sure whether we did this question or not. I think we did question number 3 and skipped question number 2. And as far as I'm able to recall, I think I've given you question number 2 as the homework, right? All of you, is that correct? Tell me whether you did question number 2 or not. Anybody having problem with that or not? If everybody is okay with question number 2, we will be moving to the next question number 4. Guys, Emma, do you have any doubt in the second question? Am I audible to all of you? Ayan, Hiba, Sania, Mariam.
Yes, sir.
Yes, sir.
Yeah. So do anybody have any problem with question number 2?
No, sir.
No problem. Okay, so I'm presuming that all of you must have done it. Anyways, if anybody have any doubt in question number 2, please tell me. Or otherwise, let's do one thing. Let's just move to question number 4 first, And after solving question number 2, if time allows, we will be doing question number 2 as well. However, this question was the homework question, so we will come back to question number 2 after doing question number 4. Okay. All right, everybody. Everybody, is that clear to all of you?
Yes, sir.
Okay. So question number 3. It is a little lengthy question, since in this question we are no. I think we did question number 3 as well. So I'm moving to the question number 4. Yeah. So I'm saying that question number 4 is a bit lengthy since it requires us to prepare so many accounts. The realization account is required in it. Apart from the realization account, we need to prepare the partner's capital account, partner's loan account, cash account, everything. So 4 accounts are required in this case. 1, 2, 3, 4. Yeah. And few adjustments are also given. So this will be taking some time. You need to be very, very attentive while solving this question because it is lengthy. It will take some time. And since it is a full-fledged question, in this question we need to prepare the realization and partners capital account. And so basically through this question we will be able to cover everything. So this is one of the important question of this chapter. Okay. So let's start. So question number 4 says Yogesh and Naresh were partners sharing profit and losses equally. They dissolved the firm on 1st of April 2019. Naresh was assigned responsibility to realize the asset and pay the liability at remuneration of rupees 10,000, including expenses. Balance sheet of the firm as on that date is given as. On the asset side, you can see we have cash and bank account, investment, debtors, provision for doubtful debt. As discussed in the previous class, provision for doubtful debt, I've told you that it will be treated as a liability. It is treated as a liability. Then bills receivable, profit and loss. This is a debit balance of the profit and loss. So this is considered as a loss. Then creditors is there, bills payable, Naresh loan, Mrs. Yogesh loan, investment fluctuation fund, capital account, capital balances of both the parties. Apart from the balance sheet, there are a few adjustments also given. Firstly, for the first thing in the adjustment, it says that Yogesh was to pay his wife's loan. Okay, so Yogesh will be paying off the loan of her wife. Then just a minute. Then debtor realized rupees 30,000. Naresh was to take investment at an agreed value of 26,000. Creditors and bills payable were payable after 2 months, but were paid immediately at a discount of 15%. Bills receivable were received at allowing 15% rebate. A debtor previously written off as bad debt paid rupees 15,000. Unrecorded asset realized 10,000. And in this question, we need to prepare realization, partners capital account, partners loan account, and cash. So question is not that difficult. The only thing with this question is that this is a bit lengthy. It will take some time to complete this question. Apart from being lengthy, the question is not that difficult. We will be easily be able to solve it. So let's just start with, first of all, since the question requires us to prepare the realization account. So keeping all of the adjustment in mind, let's start with the realization account first of all. So guys, I want all of you to prepare the format of the realization account quickly. Everybody prepare the format of the realization account quickly. This is how we will prepare the format of the realization account. And as all of you know, in the realization account, first thing that we'll do is we will transfer all the assets of the business to the debit side of the realization account. So let's start doing it. So first of all, let me write down. I will write down two sundry assets. let's start transferring all the assets one by one. So first thing that is given in the balance sheet on the asset side, we have cash and bank. So cash and bank is not transferred to the realization account. However, it will be transferred to the cash account or bank account, right? So apart from the cash and bank, we will be transferring the investment, debtors, BR, all of these will be transferred. PNL account is not transferred to the basically realization account. This will be transferred to the capital account. Right, and this will be transferred to cash or bank account. All right, so let's do this quickly. So firstly, we'll write down the first thing that will be written here is investment. Value of investment is 30,000. Then we'll write down the value of the debtor. Debtor will be written without considering the provision. Debtors 40,000. As you can see in the balance sheet, the value of the debtors were 40,000. Then apart from the debtors, the next thing that we will write down is bills receivable. Bills receivable is 33,400. Then okay, so this is it from the asset side. We are not required to transfer anything else from the asset side, right? Investment, debtor, and bills receivable done. Now we'll move to the liability side. From the liability side, we'll transfer the creditors, bills payable. Naresh loan cannot be transferred to realization, since I've already told you that partner's loan is directly transferred to the partner's capital account. So Naresh loan cannot be transferred to the basically the partner's capital account. Sorry, the realization account. Mrs. Yogesh loan is a liability, so it will be transferred to the realization account. Investment fluctuation fund or reserve will be transferred to the realization account. So these four items will be transferred to the realization account. Let's do it quickly. So on the credit side, we'll write down to sundry creditors. Sundry creditors. Sundry liability. Write down the value of the creditors. Creditors were valued at, let me check, 40,000. Then there is bills payable as well. Bills payable as well. So bills payable is also 40,000. As you can see on the liability side, we have bills payable at 40,000. Then we need to transfer investment fluctuation reserve. So I'm writing this in short, IFR. The value of investment fluctuation reserve was 8,000. And then, as I told you, provision for doubtful debt is also considered as the liability, right? So provision for doubtful debt will also be transferred to the credit side of the realization account. Provision for doubtful debt. and the value of provision for doubtful debt was 4,000. All right, everyone. And then there was one more liability. Mrs. Yogesh loan was also there, right? As you can see, Mrs. Yogesh loan was 42,000. So let's also write that down. Mrs. Yogesh loan. Amount was 42. Just a minute. $42,000. All right, everyone. Is this clear to all of you? Anybody having any doubt understanding this point? We have transferred all the asset and liabilities on the relevant side of the realization account. Is everybody clear about this?
Yes.
Yes or no, guys? Okay. All right. Once we are done with the transferring of the asset and liability on the relevant side of the realization account, then we'll come back to the question, and now we'll focus on the other adjustment given in the question. So let's just move to the next slide. Here you can see Yogesh was to pay his wife's loan, right? So let's focus on the Yogesh's wife loan. Mrs. Yogesh loan was 42,000, and basically Mr. Yogesh have committed to pay this loan. So what we'll do, we'll go to the realization account, and this will be written as this liability will be paid off by Yogesh. So write down on the debit side to Yogesh account. Right, everyone, to Yogesh account or wife Yogesh's capital account. This is Yogesh. No, 42,000. Then understood, everyone? Is this point clear to all of you?
Yes, sir.
Okay, coming back to the next adjustment, it says debtor were realized at 30,000. Debtors realized at 30,000. So we'll go on the credit side. We'll write down to cash account or bank account. Debtors. We'll write down the realizable value of the debtor, 30,000. Okay, and just a minute. Okay, coming back to the question again, you can read the third adjustment. Naresh was to take investment at an agreed value of 26,000. Okay, so Naresh will be taking over the investment as well. So we'll write down the name of the partner to Naresh account or Naresh capital account. Investment is being taken over by Naresh. So we'll write down the value of the investment. He's taking over the investment at 26,000. All right, then creditors and bills payable were payable after 2 months, but were paid immediately at a discount of 15% per annum. Now, see, this is very, very important. This point is very important. What does this say? This says that creditors and bills payable were payable after two liabilities, creditors and bills payable, which were required to be paid off after 2 months. are allowing us a discount of 15% because of the payment, because of making the payment of the liability before the due date. Because of that, we have been allowed a discount of 15% per annum. Everybody getting this point? Creditor, let's see the value of the creditor. Value of the creditor was 40,000, right? Because the firm is dissolving, so we need to pay off the creditors. So we earlier we have decided to pay off the creditors after 2 months. But since we have decided to dissolve the firm, so we need to pay off the creditors immediately. And because we are paying the value of the creditors immediately, therefore we are getting a discount of 15% per annum. And same in case of bills payable as well. We were to pay the bills payable after the period of 2 months, but since we are paying this earlier, we are paying before the due date, and because the payment is being made immediately, and therefore we are getting a 15% discount in this case as well. I hope everybody is getting this point. Everybody understood? Creditors and bills
Yes, sir.
payable are paying. Okay. So let me show you how the calculation will be done in this case. First of all, let's talk about the creditor first. Creditors, the value of the creditor was 40,000. So total amount payable towards creditor is 40,000. But because we are paying before the due date, so we will be given a discount. At what percentage? At 15% per annum. 15% per annum. So let me show you how this will be done. First of all, we'll write down on the debit side of the realization account. Just a minute. To cash or bank account, because we are paying the liability, so we need to record this on the debit side. We'll be writing it as to cash or bank account. Creditors is being paid now. So creditors is being paid. 40,000 is the total value of the creditor, but we are paying it 2 months earlier, and therefore we are getting a discount of 15% per annum. Now see, this is how we will calculate it. 40,000 is the total amount that need to be paid, but because we are making it paying it earlier, we will get a discount of 15% per annum on 40,000. So we'll calculate the discount. Discount will be subtracted. We'll subtract the discount, write down the value here. Let's calculate the value of the discount. So this is how we will calculate the discount. See, pay attention, try to understand. Just a minute. This is how we will calculate the discount. 40,000. On 40,000, we will be getting a discount of 15% per annum. But tell me, for 2 months. Got it, everyone? Is this clear to all of you? Yes or no? 40,000 is being paid, so we will be getting a discount of 15% on this amount, but only for how many months? Only for 2 months. So the payment is being made 2 months early. So the discount will be available for the 2 month period only. Is
Sir,
that
we
clear
can
to all?
hear you clearly.
Am I audible now, everyone?
Yes, sir.
Is there some problem with my network, or only the microphone is like
I guess microphone, sir.
Could I speak a little louder?
Sir, it's like very feeble, your voice is. And it's,
I'll try to speak a little louder now. Am I audible now? Is it clear? Is it better now?
no, sir, there's some distractions.
Distract. Now?
Yes, sir.
Okay. Okay, let's continue. So basically, what I was saying is that since we are paying the creditor 2 months earlier, because of that, creditors are allowing us a discount of 15%. But since the discount, the payment is being made 2 months earlier only, so the discount will be calculated for 2 month period only, not for the entire year. right? So since creditors are saying that they will be allowing a discount of 15% per annum, and because the payment is being made 2 months earlier, so the interest discount will be calculated accordingly. 40,000 on 40,000, we will be getting a 15% discount. We will be getting a 15% discount, right? But this will be calculated for 2 month period only, 2 upon 12. Is it clear, everybody?
Yes, sir.
Okay, let's just calculate it. Once you will calculate it, you will be getting, just a minute. I think it will be 1,000. 40,000 into 15% into 2 by 12, you will get 1,000 as the discount. So let's just subtract 1,000. So the total payment, ultimately the payment that need to be made to the creditor will be only 39,000. Am I clear, all of you? Is this point clear to? This is very, very important. You need to understand this point. Just tell me if it is not clear.
Sir, that percentage.
That percentage was 40,000 upon 40,000. We need to calculate 15% per annum, right?
Yes, sir.
And since payment is being made 2 months earlier, this was per annum interest, per annum discount. And because we have made the payment 2 months earlier only, so we will get a discount for the discount payment for the discount will be allowed for 2 month period only, 2 by 12. Is it clear now?
Yes, sir.
Okay. Same will be done in case of the bills payable as well. So bills payable were to be paid after 2 months, but since we have decided to dissolve the firm, we have also decided to pay off the bills payable as well. Now look at the value of the bills payable. What was the value of the bills payable? Bills payable were, let me show you. Bills payable were 40,000, right? Is that clear? Bills payable were 40,000, and upon bills on bills payable as well, we will get a discount of 15%. So that means in this case also, the final payment that will be made to bills payable will be 39,000 only. We will get a discount of 1,000 as well on this, on the value of the bills payable as well.
So the previous one is 600, right?
Previous
Instead
one
of
was 600.
1,000.
What was 600? Sorry.
Instead of 1,000 for the creditors, it's 600, right?
Discount should be 600. That is what you are saying.
Yes.
Okay, just a minute. Let me calculate it. As far as I think it is 1,000. It should be 1,000. Let me calculate it. 40,000 into 15%. This will be 6,000. Is that right? 40,000 into 15% will be 6,000. Is that correct?
Sir, I did all together into 2 by 12 also.
No, do it this way. Now, first of all, calculate 15% of 40,000. And once you get 15%, then just multiply 6,000 into 2 upon 12. This way, you will be getting a discount of 1,000. That is the proper way of calculating the discount. You just calculate 40,000 into 15% first. You will get 6,000. And this is the total discount of the entire year. But since we made the payment 2 months earlier only, so discount will be calculated proportionately. Discount into 2 by 12. So this way you will be able to calculate 1,000. Is that clear to you now?
Yes, sir.
And same will be done in case of the bills payable as well. Okay, so we have made the payment of the creditors and bills payable. Moving on to the next point, next adjustment. It says in the next adjustment, point E, it says bills receivable were received allowing 5% rebate. So we have received the payment on bills receivable after allowing a discount of 5%. That is what this actually means. So we'll go on the credit side of the realization account, and on the credit side here, we'll write down bills receivable. What was the value of bills receivable? This was the value. 33,400 was the value of the bills receivable. Upon this, we have given a discount of 5%. We gave a rebate of 5%. So 33,400 minus 5%. This will be 1670. And after subtracting it, we will get 31730. So 31730 is realized on bills receivable. I hope this point is also clear. Everybody, is this clear to all of you?
Yes, sir.
Okay. Done, everyone? Everybody clear? Yes or no?
Yes, sir.
Okay, moving on to the next adjustment. Point F, it says debtor previously written off as bad debt paid rupees 15,000. So earlier we have written off one of the debtor considering it as a bad debt. Now we realize 15,000 from the bad debt. So that is obviously a kind of income. That basically means that is a realizable value of the debtor. So we'll write that down here. Bad debt recovered. Bad debt recovered 15,000. Is it clear, everybody? Bad debt recovered 15,000. Is it clear? Yes or no?
Yes.
Okay. Then one more point is here. So we need to just drop it down. Just a minute. Okay. Moving on to the next adjustment. The next adjustment is changed. Unrecorded asset realize. Unrecorded asset realize, that is also a kind of gain. And we will record that here on the credit side. Unrecorded asset realized. Unrecorded assets. Value of unrecorded asset was 10,000. Done. We are done with all the adjustment, I guess. Nothing else is left as far as you just need to consider one thing. Make sure all the liabilities must be paid off. All the liabilities, because at the on the dissolution we need to pay off all the liability. So let's just ensure that. First of all, let's just check whether creditors were paid or not. Yes. Bills payable were paid or not. Yes. Investment fluctuation reserve is not something which is required to be paid because it is not actually a liability kind of thing. However, this is recorded on the liability side, but this is not something which need to be paid to someone, right? So this is not required to. Provision for doubtful debt is also same. It is not required to be paid to some outsider, so this is not required to be paid at all. Mrs. Yogesh loan is already paid by Mr. Yogesh himself. So I think we have treated, we paid off all the liabilities, right? Is that clear, everyone?
Yes.
We paid off all the liabilities. So we can move to the balancing of the realization and finally find out the profit or loss. Let's just total all these value. Let me do that for you. First of all, totaling the asset, sundry asset. So it will be, just a minute, 30,000 plus 40,000 plus 33,400. This will be 1,34,000. Let's just total the sundry liabilities as well. Sundry liabilities will be 40,000 plus 40,000 plus 8,000 plus 4,000 plus 42,000. This is 1,34,000. Then let's total the cash or bank account total as well. 30,000 plus 31730 plus 15,000 plus 10,000. This will be 86,730. and totaling this side 39,000 plus 39,000, 78,000. 26,000. All right. Now, since we transferred all the asset liability, we realized the asset, we paid off the liabilities as well. Now we can, I think, total the realization account and determine the profit or loss. So when you will total it, you on the credit side, you will get 2,46,730. Just a minute, let me show you. 2,46,730. And when you will subtract all the debit side values out of it, you will get a profit. There will be profit in the realization account, right? And there will be a realization gain of 13,330. 13,330. This is the realization gain, right? So we will be transferring to realization profit. We'll transfer this to Yogesh and Naresh, right? Yogesh and Naresh account. How much will be transferred to both of them? 6665. And now we will close the realization account. 246,730. Tell me, everyone, is this clear to all of you? Yes or no? Realization account is clear, everybody?
Yes, sir.
Anybody have any doubt? This is the complete realization account. Anybody want to write down? Anybody is still writing it? Do let me know, so that if when you are done, we need to prepare the partners capital account as well. Just tell me whenever you are done.
Sir, in the credit side, isn't it buy?
Yeah, I'm sorry. Just a minute. Sorry. By this will be by, and this will also be by. Anything else? Anybody? Everybody written this down?
Yes, sir. Done.
Done, all of you? Ayan, Iba, Mariam.
Done.
Done. Just a minute. Okay, so we are done with the realization account. Now we need to prepare the partners capital account. So let's just do that quickly, everyone. Let's prepare the partners capital account. So first of all, let me complete this part particulars. All of you, please prepare the format of the partners capital account. Yogesh, Naresh, then particulars, Yogesh and Naresh. Okay, so let's just first of all transfer the opening balance of the partner's capital account. So we'll write down by balance BD, right? So opening balance of partner's capital account must be there in the question. This is the opening balance of partner's capital account. Just a minute, let me show you. This is the opening capital balance, 21,000 each. Okay. And then we need to transfer the items from the realization account as well. Just a minute. There was one loss in the balance sheet as well, right? We need to transfer that loss as well. As I've already told you that loss need to be transferred to the partner's capital account as well. So this loss 1,10,600 need to be transferred to the realization account, right? So realization account will be, sorry, partner's capital account. Partner's capital account will be debited by such loss. So we'll write down by, sorry, to profit and loss account. And total loss was of rupees 1,10,600. This will be distributed since both the partners are equal partners. So the loss will be distributed among the partners equally. 1,10,600. When you will distribute it equally, both the partners will be getting 55,300 each. So we'll write down 55,300, 55,300. Right, everyone? Is it clear? All of you, is it clear?
Yes, sir.
Okay, now we'll go to the realization account and find out the name. Wherever the name of the partners is written, that amount need to be transferred to the partner's capital account. Go to the realization account. Wherever you find the name of the partner, such item need to be transferred to the realization account. All right. So not the realization account, sorry, partner's capital account. So as you can see, in the realization account, the first thing on the credit side, we can see the profits of the realization account. Let's just first of all transfer this. So we'll go to the partner's capital account. On the credit side, we'll write down by realization profit or simply realization account 6665 6665. All right, everyone. Then then there is one more thing. As you can see on the, let's focus on the debit side first. On the debit side, name of the Yogesh also appears, Yogesh account. And here it is saying that Yogesh is paying off the liability of Mrs. Yogesh loan. All right, so we'll go to the partner's capital account. On the debit side, on the credit side again, we'll write down by Mrs. sorry, by realization account. Yogesh has paid the total loan of rupees 42,000. Na? 42,000. This loan relates to Mrs. Yogesh loan. Mrs. This writing this is not mandatory. I'm just writing it just to just for a sake of a reference. You can skip this point as well, but you need to write down the value. Realization account 42,000. Okay, then let's find out other entries which include the name of the partners. I am not finding anything on the debit side anymore, but on the credit side, as you can see by Naresh.
Sir, we are not able to see.
Is it visible now?
No,
No,
sir.
sir.
Is it
Yes,
now?
sir.
Okay.
Yes, sir.
Just a minute. Just a moment. Everything just got deleted by mistake. I need to redo it. Okay, done. So all right. So now we'll move back to the realization account one more time and find out name of the partner. And again on the debit side, on the credit side, as you can see, Naresh have taken over the investment. So we need to write that as well in the partner's capital account. Naresh to realization account for the investment 26,000. Okay, then I think this is it. Everything is done. Just a minute. Okay, I think I missed one point in the question. Just a minute. There was one point in the question where, like at the very beginning, you can see it says in the third line, it says that, so on the in the second line, it says Naresh was assigned the responsibility to realize the asset and pay the liability at a remuneration of 10,000, including expenses. So that means realization, the responsibility of realization is assigned to Naresh, and for this purpose, he will be given a commission. He will be given a remuneration of rupees 10,000, right? So we need to record that as well in the realization account. I forgot to do this. Let me just let me just write that down. However, it is not going to affect the profit or loss, since I've already, while calculating it, I've considered the value of the remuneration. Sorry, just a minute. I'll have to adjust it somewhere here. To Naresh account. Naresh will be paid remuneration for dissolving the firm, 10,000. And since he have got the remuneration, we need to record that in the partner's capital account as well by realization account remuneration. 10,000. 10,000 for Naresh. Is that clear, everybody?
Yes, sir.
We skipped that point earlier. Okay, so I think everything is clear till this point. And just a minute. Okay, now let's just calculate the balancing figure. Let's just close the account and find out the balancing figure. First of all, let's do it for Yogesh. Yogesh. So on the credit side, Yogesh is having, let me total this, 21,000, 665 plus 42,000. So the sum total of Yogesh is on the credit side is 69,665. 69,665. Not 666, just a minute, 665. And we will subtract the debit side values, and by subtracting it, we will get the closing balance to balance CD. Balance CD for Yogesh will be 14365. 14365. And this way, we will be able to tally both the sides of Naresh account. 69665. All right. And similarly, we'll do it for the Naresh as well. But as you can see, Naresh debit side is greater than the Naresh credit side. So debit side of Naresh is 55,300, right? Plus 26,000. So totaling it, we will get 81,300 on the debit side. 81,300, right? And Naresh account credit side is subtracting 81,300 minus 21,000 minus 665 minus 10,000, we will be getting 43635. 43635. So now what does this mean actually? What does this actually mean? This means that now see, the credit side of Yogesh is greater than the debit side. This means that we need to pay Yogesh 14,365. Right? We need to pay Yogesh 365. So instead of writing down the closing balance, because form is dissolving now, usually we write down the closing balance, but because form is dissolving, instead of writing down the closing balance, we need to pay off Yogesh. How much? Cash will be paid, or through bank he will be paid 14,365 since the form is closing, right? But in case of Naresh, tell me whether we need to pay Naresh 43,635, or we need to give 43,635 to him. He need to pay us, or we need to pay him? Tell me. Credit side is, in case of Yogesh, credit side was greater than the debit side, right? So we need to pay Yogesh, right? So in that case, we'll write down, see, earlier no, just a minute. He will have to bring in cash. Nah, we were, in case of Yogesh, we were required to pay Yogesh 14,365 through bank or cash. But in case of Naresh, we need to pay him by cash or bank. We will have to pay him 43,635. Since the debit side is greater than the credit side, he will have to bring in cash or bank for 43,635. All right, he will have to bring in cash. Is that clear?
Yes.
Okay, now pay attention. One more thing is here. We already have borrowed. We already have borrowed from Yogesh. There was one Yogesh loan was there, in the balance sheet. If you're able to recall, there was one loan in the Yogesh, in the balance sheet by the name of Yogesh. See, pay attention. You're able to see that? Naresh loan was 44,000. Is that clear? Naresh loan was 44,000. So we need to pay 44,000 to Naresh. So what we will do now, since we already required to pay Naresh 44,000, so instead of asking him to pay 43,635, what we will do, we will adjust this amount toward his loan account. We will adjust this amount toward his loan account. Everybody clear? See, we need to pay 44,000 to Naresh, and here Naresh needs to pay firm 43,635. So instead of asking him cash or bank, what we will do, we will in fact subtract 43,635 from his loan account, and the remaining amount will be paid by the firm in cash. Right? Is that clear, everybody? So what we'll do, we will simply adjust 43,635 to Naresh loan account, to Naresh loan account. Tell me, everybody, is this point clear or not? Sania, Eman, not Sania, sorry, Eman, Hiba, Ayan.
Yes, sir.
Yes, sir.
Is
Yes,
it
sir.
clear, all of you? If you have any doubt, I can explain this again. Just tell me if anybody have any problem understanding this. See, what I'm trying to say here is that after adjusting the capital account of Naresh, we found out that instead of giving him cash, this time we need to ask him to give 43,635 to firm by way of cash. But suddenly we realize that we already had to, we need to, the firm need to pay 44,000 to Naresh as well. So instead of asking him more money, let's just instead adjust this amount toward the loan account of Naresh. So what we will do, we will simply subtract loan account by 43,635. We will reduce his loan by 43,635, and remaining loan will be paid to him by way of cash. All right, all of you? Mariam is saying clear, sir. Okay. All right. So moving on to the next point. Now we will simply close this by totaling the credit side. We should get 81,300 on this side as well. Done with the partner's capital account as well. We prepare two accounts: realization account and the partner's capital account. Everything is done. Now we will move to the cash account. Let's just quickly prepare the cash account. In order to prepare the cash account, what are the items that we require? Firstly, let's just look at is there any opening balance of cash, yes or no? For that purpose, we need to go to the balance sheet. Do you think there is any opening balance of the cash account, yes or no, guys? You are able to see cash or bank account in the asset side, yes or no? Say no, yes or no. This is opening balance. Yes. How much is the opening balance? How much is the opening balance of the cash or bank? That is 6,000. Is that clear?
Yes.
Sir.
Everybody? Okay. Now what we will do, we will go to the realization account and try to find out item that contains the name of the cash account. So let's go to the realization account. Do you think we have cash account anywhere? Yeah, we have cash account on the credit side as well as on the debit side. So what is the total of the credit side cash account? It is 86,730. So this will be transferred to the debit side of the cash account. 2, we'll write down 2, realization account. Realization account. And amount will be 86,730. All right, everyone. Is this clear to all of you?
Yes,
And
sir.
similarly, we will do the same treatment for the debit side cash account as well. So 78,000 on the debit side. So that means on the credit side, we'll write that down in the cash account by realization account 78,000. All right, everyone. Is it clear? Yes or no? Okay. Then there was one cash account was there in the partner's capital account as well, if you're able to recall. See here, we just prepared partner's capital account, and here you can see on the debit side of the Yogesh account, we have 14,365. So that means this need to be transferred to the cash account as well on the credit side. So I'll write down by Yogesh account 14365, 14,365. Is it clear as well? Is this clear? Yes or no?
Yes.
Yes, sir.
Okay, now one more last point. Now pay attention. What was the loan of Naresh? Naresh loan was 44,000, is that right? And out of 44,000, we adjusted 43,000, sorry, let me check. 43,635. 43,635, yes, through the partner's capital account. Yes or no? This was adjusted through the partner's capital account. And what is the remaining amount? So minus 44,000, remaining amount is 365. This is the remaining amount. Tell me, what do we need to do with the remaining loan? This is outstanding or the remaining loan. Tell me, what should we do with this? Whether we should pay it or not, because the form is dissolving. You just tell me whether we should pay this amount or not. Yes or no? Is it clear, everybody? What I'm asking is this question clear to all of you? Ayan, Hiba, Sania,
Yes,
Mariam. Yes. Aman, is this clear to you?
Yes, sir.
Okay. See, Naresh's total loan was 44,000. We adjusted 43,635 of his loan towards the loss of the partner's capital account, and the remaining amount which is yet unpaid, we need to pay him, and we will be paying it through cash. So we'll write that amount, write that value here by sorry, what was the name? Yeah, by Naresh loan, by Naresh loan account 365. Let me write that down as well. 44,000 minus 43635. Done. Nothing else is required. I think now we can close the cash account, and if everything is correct, both the sides should tally. Totaling the debit side first, we will get 6,086,730. So debit side balance is 92730, and let's total the credit side as well. 78,000 plus 14365 plus 365. Yeah, we are getting the same value, 92730. Right? Is it clear, everybody?
Yes, sir.
Yes,
Okay,
sir.
one last point only left. One more account we need to prepare. That is very simple and short. We'll be able to do it quickly within 5 minutes. Just give me a moment. We need to prepare one more account, na? You're able to recall that? We need to prepare the loan account as well. Question requires us to prepare the loan account as well. So let's prepare the format of the loan account quickly. Loan account of whom? Tell me, whom's loan account we'll have to prepare?
Naresh.
Yes, Naresh loan account need to be prepared. So Naresh's loan account. So opening balance of Naresh loan account was, we'll write this down as by balance BD. Opening balance was 44,000. Right? Opening balance was 44,000. Out of this, we have adjusted part of loan towards the Naresh capital account, and remaining is paid out of bank. So to Naresh's capital account, through Naresh capital account, 43,635 was adjusted earlier, and remaining was paid by way of cash and bank. How much was paid through cash? 365 was 365 paid out of bank account. This is it. Nothing is outstanding toward Naresh. Now we can simply close this down. 44,000 on both the sides. Then this is the bank account of Naresh. All right, everyone, is this clear? All of you? This question was lengthy. It took our entire session. So this kind of question will be asked from this particular topic, and this is going to be quite lengthy. You need to practice such question so many times. Only then you will be able to do it quickly, and only then you will be able to minimize the mistake. I hope everything is clear. Everyone?
Yes, sir.
Anybody
Yes,
want
sir.
to ask anything?
Wait 1 second.
Sorry, Abin, you are trying to say something?
Sir, can you show the Naresh?
Naresh loan account. Okay, just a minute. Okay, so this is it, guys. I'm giving you one question for your homework as well. Or let's just do one thing. If anyone haven't done the question number 2 yet, do solve the question number 2. That is the only homework for today. I'm showing you the question number 2 again. Those of you who haven't taken the screenshot, take the screenshot one more time. Try to do that question. Now, if anybody haven't completed it, now they will be able to solve it. Let me show you. Question number 2. This is still your homework. Doubt anybody? Anybody want to ask anything? Aman, Ayan, Heba, Sania. Any specific part of the solution you want me to show? Anybody want to ask anything?
No, sir.
All right. So since no one is saying anything, so I'll presume that everything is clear, right? And so this is it. One question for your homework. Question number 2 again. I'm a little doubtful that all of you have completed it. So make sure you do question number 2 and make sure you try all of these questions one more time. Question 1, 2, 3, 4. Practice these questions. Try to minimize the time solving this question because these questions are lengthy. It requires, it takes a lot of time. So unless and until you practice these questions if enough number of time, you will have some problem solving this question in the exam. All right. So this is it for today's session. Thank you very much, guys. We'll see you in the next session. We'll do a few more questions based on the dissolution. All right. Take care.